Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. Now, I'm already going to assume that you guys have clicked on this video because you guys read the title. So I'm going to cut to the chase and elaborate on what I mean by the title. So let's first go over the technical analysis for SPY. So there are two key levels that I've been consistently telling everyone, to you guys, to look out for. So we are on the weekly time frame here. Now, on the weekly time frame, if you guys take a look at the purple and yellow levels, there's only two levels here that are purple and yellow. This yellow line right here, okay, is what I consider the line in the sand. So this is the 363 price level. And why do I call it the line in the sand? Well, because if the stock market decides to breach this support level of 363, then we will start heading back down to that 248 to 250 price range, which is around the low of 2021. Now, why am I looking at the lows of 2021? Well, because the market has not even reached the 2021 lows. It hasn't completely erased the gains that it made from 2021. So why is this important? Well, most of the names in the stock market are below their daily 50 and daily 200 SMAs, and they've already completely shed all the gains that they've made since 2021 and some in 2020 as well, right? So they've completely erased all the 2 years worth of gains. And if you take a look at SPY here, right, SPY hasn't even gone down to the lows of 2021. In fact, we're moving away from it. So if I go back on the daily time frame, we had an incredible week so far at the time of this recording, and we've been breaking out of the broader descending channel that you guys just saw on the weekly time frame, or we've been also breaking out of this descending level of resistance. And this trend line provided a lot of heavy selling until we broke out of it, allowing us to kind of push out the sellers and forming a little tiny short squeeze for this entire week. So now, why is this important? Because this week proved that the price is heading to a very key level. And this is the second key level that I want you guys to look at. And I've been telling you guys consistently that this level was important. This 416 level. Okay, so now if you go back to the weekly time frame, so I'm kind of juggling back and forth. This 363 level is our line in the sand, right? Our line in the sand is our support level of 363. And here is our ceiling, 416, right? So 416 is our resistance level, all right, or our ceiling that we need to reach in order to start rejecting from it. Now, why do I want a rejection? Because I want SPY to start making a base. And if you guys remember at the start of this video, I said there is a base that SPY is looking to form. And I've also been saying this, right? If you want to see a longer term upside movement, right, a new uptrend, we need to see some sideways movement. And it's going to happen between two levels. So those are your two levels, right? 363 and 416. I've been telling everyone consistently to put these levels on your personal charts. So hopefully you guys do after this video is done. Now, this 416 level, okay, most likely by next week, we can hit it. And the first thing that I'm going to expect is a rejection, right? Now, I'm not going to expect to see an immediate perfect rejection from the 416 level. I'm obviously going to think that there's going to be a little bit of a pop above 416, possibly maybe into 416.50 and 417, but I'm going to keep that 416 whole number level in mind because it's easier to do numbers and math with that 416 level. So where is this 416 level even coming from, right? So if you take a look in the past year, our historical data that we have available on the charts, and if you take a look at late May and early June, so in this circled area, right, this is where we start to really kind of accumulate, right? It seems like we were looking at a nice consolidation phase with some sort of accumulation, okay? However, right, we rejected multiple times off of this 416 whole number level. And specifically, if you guys want the specific numbers, it was more likely 415.70ish to 415.50ish. But to keep things a lot easier for my brain, I'm going to look at 416. So when we rejected off of that 416, we had a huge catalyst, and that was the CPI data that came out the following week on the second week of June. And we completely start to dive down and go to the bottom until we hit that 363 level and bounced. And ever since then, okay, since mid-June, we haven't revisited that level in quite some time. So I want to see a broad range forming between 363 and 416. Now, obviously, there has to be a huge catalyst in order for us to come back down and even cross below the critical psychological level of $400 that we just broke out of if we're going to head back down to 363, right? So what could be a catalyst that can potentially bring us all the way back down to 363? Well, today, PCE numbers came out. And if you guys are members of the CFO Swing Watch newsletter, you guys should know that PCE numbers are very important to the Federal Reserve. Now, if you guys forgot what that was, okay, make sure you guys go back to the newsletter for the people who are non-members. If you guys want to join in with 50% off, make sure you guys check the link in the description box below. You have two choices for tier 3 and tier 4. Both are 50% off, but they all have different perks. So make sure you guys check the description box below and choose wisely. Okay, and remember, they have different discount codes. Okay, so with SPY here, PCE numbers came out, right? And SPY completely ignored the action today, right? As we continue to break out, and we didn't even try to reject off of this ascending resistance trend line that I just drew yesterday. So instead of using it as a level of resistance, it actually used it as a level of support, as in the morning when the market opened, we had a little tiny sell-off, and then we bounced off of this level and continued to shoot straight up and heading towards that 416 level. So this PCE number and core PCE data, right, just told us that inflation is not slowing down, right? So what did that tell me? So personally, this told me that, okay, this is most likely a bear market rally, even if we're still technically, okay, well, not still, we're technically out of a bear market, right, from all-time highs, because that's where people were, starting at for the movement to the downside, right? The percentage move to the downside. So we're completely out of the woods, okay? But with this type of action, right, and this type of economic data that's coming in, the stock market is reacting very illogically. So if the market was to, price in this data, right, I would believe that the market will start heading back down. Okay, and if you guys take a look at the weekly time frame, all right, we haven't even crossed the highs of June or even the highs of May, right? And so, if you continue to go to the previous data in the past, right, we're still in an overall downtrend. And I'm not going to be a firm believer that we would be starting a new uptrend, right? So obviously we did break out of this descending channel, right? But I'm not going to be fully convinced that we're in a full reversal and a new uptrend until we decide to break above 416 or June's high and May's high, okay? And we continue to move up, right? So I'm not going to believe that we are in an uptrend until we do those two things, or essentially three things, since I'm adding the fact that we need to break above 416 first and then use that support. So what should we expect next week? Pretty simple for me. I expect the price to at least hit 416, okay, and pop a little bit, like I mentioned earlier, and then reject back down. And once we do, I want the price to bounce again at this ascending level of resistance, this trend line right here. And once we bounce, okay, I want us to make a lower high. So this may take a couple of trading days or maybe even a couple of weeks, but I personally think it's only going to take a couple of, maybe 2 to 3 trading days. And then from that point forward, I want us to head back down and fall back into this potential rising wedge. Now, obviously, you guys might be thinking, wait a second, Andrew, this rising wedge was completely negated by today's actions, right? This price action on Friday today was completely negating the fact that this resistance level or trend line ever existed. So why am I even looking at this rising wedge? Why don't I not, get rid of it, right? But here's the thing, right? With all these bad economic data that we've been getting for the entirety of this week, okay, including GDP, second quarter GDP data that has officially officiated that we are in a recession. So why hasn't the market fallen down? Okay, so if I'm wrong about the fact that the market can come back down based on this economic data, and we can come back down to this 363 level so that we can start having a really, really broad range base forming for the future. If I'm wrong, okay, first of all, I'm going to assume and correctly correct myself that I am wrong, right? And what the price action will be telling me by that point is that the market is moving based on the perception of the future. And what is that perception of the future? Well, the market is basically has been telling us for this week that the Federal Reserve is looking to lower its interest rate hikes. Okay, so that's big. And the market is basically moving higher based on that future perception. And it's completely forgetting about, or maybe even ignoring, the fact that we have such economic data, bad and negative economic data that's been coming in, right? So if inflation continues to move up higher, okay, that future perception of the fact that the Federal Reserve may stop increasing interest rates or maybe lowering increasing interest rates, that belief, that notion will be completely wiped out once the market realizes what they've seen from this week. So that future perception is going to turn back into the Federal Reserve continuously raising interest rates and possibly hitting that 1 whole percentage point for the other and the next few interest rate hikes. Okay, so make sure you guys are watching out for the near-term future, because if the market decides to, do its price action from that perspective and perception of the future, then we will most likely come back down to this 360 level and maybe even break below this 363 support level, which is our line in the sand. So as a summary, make sure you guys have the 363 level, okay, this 363 level as your line in the sand, and then this 416, 416 level as a level of resistance, so that we can potentially have a very broad range base that could potentially form as time goes on, right? So this is the kind of a rough picture of what I would expect SPY to do. And so hopefully you guys can understand where I'm coming from, right? And hopefully you guys can have a clear picture on where SPY can potentially move in the near-term future. All right, so that's it for this video. If you guys have enjoyed the information that I've given you guys for tonight, make sure you guys leave a thumbs up and maybe leave a comment down below on what you guys think of the future for the markets. Thank you very much, and I'll see you guys in another video.